Hello, everyone, and welcome. I'm Jonathan Prince, co-founder and CSO at Finologee. I will be your host and moderator today. A few quick housekeeping points before we start. This session is being recorded and the replay will be shared with all registrants afterwards. Please feel free to post questions at any time in the chat. I'll collect them and we'll address them in the Q&A at the end, while you will be able to reactivate your microphone and the camera. We're scheduled for 1 hour, so we'll keep things moving to leave time for interaction. Let me briefly introduce today's theme and our speakers. Today's webinar is titled Making Multi-Bank Liquidity Management Simple and Smart. The objective is straightforward. Explore how treasurers and finance leaders can simplify multi-banking operations, gain real-time visibility, and automate liquidity management while keeping full oversight and control. We'll do this three lenses: a strategic transformation view from PwC, a practitioner treasury view from ATEL and the European Treasury community, operational technology view with a short live demo of our Links platform. Timing-wise, I'll set the scene and introduce Finologee and Links. Then Anne Massardier from PwC will speak about transforming treasury operating models. François Masquelier from ATEL will share a treasurer's perspective on automation, control, and KPIs. Stefan Kirsch from Finologee will close with a demo. Then we'll take your questions. Before handing over, let me introduce the speakers and who we are at Finologee. Joining me today, Anne Massardier, Director in Finance Advisory at PwC Luxembourg, working with finance and treasury leaders on operating model transformation and digitalisation. Good morning,
Hello, everyone.
Anne. François Masquelier, President of ATEL and Chair of EACT, formerly Senior VP Treasury and Risk Management at RTL Group. François has more than 25 years experience in corporate treasury and is a long-standing voice in European treasury practice. Good morning, François.
Good morning to all.
Then Stefan Kirsch, Head of Business Development at Finologee, who will walk you through the Links dashboard and cash concentration capabilities. Good morning, Stefan.
Good morning.
Thank you all for being here. Let me now give you a quick overview of Finologee and why we built Links. At Finologee, we're a Luxembourg-based platform builder and operate focused on digitalizing critical financial processes for banks, financial institutions, and corporate securely, modularly, and with compliance by design. Since 2012, we've built and operated several regulated platforms: DigiCash, now Payconic for mobile payments in Luxembourg retail banking, PSD2 and account holder reporting APIs, KYC Manager for digital onboarding, client data and risk automation, and Links, our professional multi-bank connectivity platform focused on payments, cash, and assets reporting for corporate and institutions. We operate under a PFS license and we're ISO 27001 certified, DORA ready, and hosted locally with PostDeep. Links is our answer to a very concrete treasury pain point, fragmented multi-bank liquidity management. So what Link provides in a bank agnostic orchestration layer, sorry, I will sometimes lose my screen because of poor connectivity between my laptop and the screens. Apologize for that. So again, what Links provides in bank agnostic orchestration layer: one place to manage banks and accounts across multiple jurisdictions, one set of workflows, rights and approvals, and configurable rules that turn policies into real-time actions with full auditability. At a functional level, Links covers multi-bank account management, cash and securities, payments and collections, credit transfers, SEPA direct debits, instant payments, cash concentration, sweeping and liquidity automation, counterparty and KYC supported pay controls, granular user and signatory rights, plus compliance e-signature and mobile approval, and integration with ERPs and PMS treasury tools via APIs. For treasurers, this translates into the core benefits you will hear throughout today. Improved visibility and control over group liquidity, lower manual workload and operational risk, better forecasting due to higher data quality, standardized processes across banks, entities, and stronger compliance, traceability, and audit log. So as you listen to Anne and François, I invite you to map their points to these capabilities, particularly the balance between efficiency and control. With that context, let's move to the strategic view. Anne, over to you for the PwC perspective on transforming treasury operating models.
Thank you, Jonathan. Thank you. So as presented by Jonathan in the introduction, I'm Anne Massardier. I'm Director in Finance Transformation Team. I've been working 15 years in banking and in wholesale banking for corporate treasury. And for the last 3 years, I moved to advisory and consulting to support clients and transitioning or for technology related, or as mentioned by Jonathan, more related to generic operating model targets. So indeed, our first slide, we can see, and I think that will ring a bell to you, maybe remind you something you know. This is what we typically see as treasury landscape when talking and launching project to our client. And I have to say that in fact it didn't change a lot the last 10 years. And what we see is that the way that currently the activities are processed is still very manual, very siloed. Treasury is really at the center of many activities. So supporting the business, of course, in managing risk, as we said, but also supporting the accounting activities, providing very useful insight for management reporting, and also being able to create some time, and depending a bit on the ambition of your organization, even some revenues. So in managing, of course, the cash the best way possible. And what we can just assess and what we see in the current organization, whatever the size, and this is not something that is only for a small mid-corp, that's something spread even in very mature organization, is that the activity are still very siloed, relying on Excel, over-relying clearly on Excel, for different reasons. First, because between systems themselves, the connectivity is limited. So you need to have this interface and this data crunching being performed in Excel before injecting in other systems. But also even because sometimes all the activity and all the domain is completely performed out of Excel. And that's completely what we try to change, as Jonathan mentioned, first for security reasons, because clearly you have lack of audit trails, and data governance is very weak, and this is not, I think, something affordable in the current ambition of Luxembourg. But also because it's a huge barrier for treasury and for finance more in general to develop their strategic role into the organization. Why? Because you spend so much time in data crunching, reconciliation, explaining mismatches, discrepancy, trying to match one report with another, etc., that of course the time left for you to provide to your management high-level input is clearly reduced. So what's the ambition? So we can go to the next. What we would dream one day to achieve is that to work in this smooth and agile environment where you have, of course, this data, unique data source, the golden source, and systems being interconnected, able to transfer the data from one point to another in a quite smooth way, but also allowing you to make very different analytical report in different dimensions. And I think that it's very key, you know, for the treasurer, for the finance manager in general, but also for the treasurer, because we have a huge pressure in Luxembourg, which is the staff shortage. So you need first to reduce the time spent by your team on those operational activity. You need to optimize their time. You also need to attract and to retain. And that's a challenge we all have. And I can share it with you also. PwC, I mean, retaining the competencies and good profile is a challenge. So you need to offer to your staff interesting and strategic activities. And of course, moreover, for long-term organization, you need to be able to support the growth of your activities. And I think that's where indeed we have identified a strong value in the links solution is this capacity to get rid of the standard siloed and manual processes that you can use with we all know the standard payment system in Luxembourg, maybe accessing independently each bank platform to collect manually your bank statement, to send them maybe manually to your ERP, and taking back the data. How is your ERP connected with your payment system? How are you able, based on this information, to develop projection, to develop model, forecast, etc. So starting with, I think, the very first activity in Treasury, which is the payment, the cash position, and at least making sure that this core activity, which is key for you next to move to more strategic one, is I think, the first building block you have to take care. Maybe we can go then to the next slide. Thank you, Jonathan. So based on this assessment and these diagnostics, okay, we're still maybe working in a very manual and very time-consuming mode. We know where we want to go, because I think it's clear enough for all the organization that creating a data golden source is the only way for the future, that moving maybe to cloud-based solution with platform as a service is also I mean, the most preferred, I would say, in the current situation way. So I think based on that, we all agree that we are living quite an important transforming momentum. However, it's very important to think about the way you will do it. So we were discussing about leaks. That's today, I think, the core of the webinar. However, more generally, a solution indeed is a very important element of your transformation, but the solution will never be sufficient to ensure the development is future-proof and sustainable into your organization. And we want our clients, so a first tip, or I would say your first re-attention point I would like to bring today to your attention is the fact that even when you launch a technological project or digital transformation, it's never only about solution. You have to consider every impact, because you can have, and I just finished, for example, a project to a client who had an amazing tool, but nobody knew to use it because there was an ambassador leaving 2 years ago and no one really was comfortable using the system. So it's very important indeed that, of course, you select solution that you know your team will empower on, that you know everybody will adopt, and that you make sure that this mobilization is built on from the beginning. For a solution like Links, for example, I would say that it's maybe a bit more easy because it's a very user-friendly, of course, a solution, and I think built on a pragmatic mode. And we have very frequent exchange with Jonathan, with the client use case. Exchanging on the voice, I would say, of the market, the feedback for client, what would really work for them. But still, I will really like to raise to your attention the fact, please don't only think about the solution, but think about how your process will work around this solution, how your governance will consider the system, that it be in terms of data, but also in terms of control, and of course, how your people will integrate with it. not only the operating model that are impacted by the solution, but of course the rest of your IT landscape. I think it's even more important than having the best solution that would, I would say, address every time, I mean, the most efficient solution on each functional case, but more important is to have a good combination. We saw in the previous graph that very important is the connectivity between the system, how my ERP will be able to connect with my payment solution, how can I be implement on top of that a FP&A platform that will enable the data extraction from the payment solution, from the ERP, account receivable, account payer, making projection on my liquidity forecast, enabling me to make decision about, okay, am I short of funding in 2 months' time? Am I in cash excess? What can I maybe do with that? And have much more strategic input than we actually do. So that's really key when you select, I would say, the solution and you think about how they will integrate into your IT landscape and into your organization. Maybe 2 other points, as you can see, that I would like to cover with you. One is to be ambitious. I know that here we're talking about payment, but we're not only talking about payment. We're talking, as Jonathan mentioned, about the bank connectivity, but the way you will structure your internal in-house banking. Maybe you will set up some virtual cash pooling, and so it's all the way you will review your internal mode of coverage and the role of your treasury. So be ambitious when you launch project. Not only think about the solution that will automate a process. I think we are no longer at the RPA stage, and we have to move much further. And very important that you consider what your system, what your, in general, IT landscape will look like in 5-10 years. Meaning integrating the future capabilities. So we have more and more thinking and reflection about how AI will integrate into the system. And then it's very important also that you always keep in mind what's the roadmap of my integrator, my editor. So what's the roadmap of the company that is providing me the system, what's their view, how robust are them for the next year, and how ready are them to invest and to develop for new capabilities. If some of you maybe are not aware, and that will be my last point, Luxembourg is really trying to support this initiative, trying that the local organization be more ambitious in the scope of their transformation, in the magnitude and the holistic impact of the project, and has launched, it's nearly now 2 years ago, an investment tax credit for the digital transformation. At PwC, we are proud really to support the spread of this mechanism by running awareness session with our client, like we do now with you today, but also supporting them in performing the full process of completion to the Minister of Economy, etc. And this mechanism allows you to get 18% of your cost on the project. You have, of course, conditions that it be the holistic impact and the size and on your organization and the level of transformation of the project. But during a maximum of 3 years, you can benefit from 18% of tax credit on the amount of box, CapEx and OpEx of your projects. So this is a huge differentiator. I think won't be sufficient, certainly, to create an appetite for transformation, but in terms of ROI for your project, this is really something you have to consider. So I would say as a conclusion from my side that when launching a project, whatever the scope, don't limit to that. Always consider the rest and get the full picture on your organization, how it's going to run with your other system, with not only the treasury, how you're going to collaborate with this system, with the other activities, the business, the accounting, the finance. And of course, don't refrain yourself from being very ambitious in terms of future roadmap. Is my system able ready to work in 10, 15 years and support the new capabilities, and also in the scope and perimeter of the changes. Thank you.
Thank you. And particularly as I know that you were not very well at the beginning of the week, and I'm glad to see that you've almost recovered your voice. That's wonderful. And I'm really very happy that you were able to attend today. And I know that it was a big effort for you, so thanks a lot. A few key takeaways I noted, if you may. Treasuries are still spending too much time on manual file extractions, uploads, reconciliation, and redundant connections, from what I heard. Fragmented banking setups create blind spots on balances and exposures, and the winning operating models are those that digitize the value chain end to end while reinforcing controls. I think that sets up nicely for the treasurer's view. François, you lived these challenges firsthand across multinational treasury. Could you share your perspective on automation control and the KPIs that really matter?
Yeah, but first, a short introduction, as you mentioned in your introduction. So, being the chair of and having been the treasurer for many years in multinational companies, being the chair of the Luxembourg Association, we have 375 members, and the European Association, where we have 15,000 members and 7,000 multinational companies. I know quite well what is going on for our corporate treasurers. But I would like today to share with you my view as a practitioner and what we see at the treasury level, and also mention that it's not because your company is not big enough to justify a full-time function of corporate treasury and tools that it's not something that you could or you should, let's say, on board. Anne gave a very interesting, let's say, overview, and she was more global in the digital transformation and the different steps, and she gave us some pieces of advice. I would like to maybe zoom and to focus on the connectivity, because when you think about this digital project, the major and the first thing will be to make sure that you are connected properly to your banks. And when I say proper connection, it's not a multi-line, multi-cash, ETMAC or whatever type of local solution, what we call EBS, electronic banking solution, because it's domestic solution, it's solutions that are not evolving at all, that are not secure or secure at the same level of the best in-class solution. And what I like with a solution like Finologee is what we call bank single gateway. You can get connection to your bank without any exception, to repatriate the bank statement as rich as possible to facilitate and automate the reconciliation. And on the other hand, you can initiate payment from one single bank gateway with one single format, one access by all the signatories to approve the payment and to make sure that it's fully secured from A to Z and fully paperless. And as Anne mentioned rightly, to be also interfaced with other solutions. But the good news, technologies today, it's like for Formula One, the technology that the best, let's say, leaders are using could be no more accessible for smaller companies. And I would like to focus on what the CFO want and what are their key objectives. And when I talk to the CFO of our CFO circle at ATEL or to the member of our association and across Europe, they would like to optimize the use of cash to make sure what are my liquidities in real time, where do I stand, where do I sit, what should I do to manage that, and potentially to move money from one account to the others. So that's the idea, to have a full visibility, because if you have a full visibility, you can start having a, let's say, short-term cash flow forecasting, what we call the 13-week cash flow forecasting on a daily basis. And then you can also start feeding solution or at least Excel spreadsheet, where you try to estimate what will be your cash flow forecasting with a monthly situation. So that's the first point, to make sure that you have access to the right information without any exception, and to avoid what Anne remind us, the manual processes, the upload, export, import of data that could be on different formats. So the idea is to automate everything. You arrive at the office, you open a solution like Link, you see your different pool of liquidity, and the machine tell you what you should do to move and to sweep your accounts to make sure that you are at zero, you have no, let's say, a critical situation, and you can do what I call the DIY, the do-it-yourself cash management, where you can sweep your account. You can give it to a bank, but if I take the example of Luxembourg, only few banks, not to say only one bank, could do that, and it's monobank. So it means that you will concentrate all your flow with one bank. So you are not really bank agnostic. Sometimes you depend from the system of the bank, and you, let's say, frustrate the other bank because all the flows will be channeled to this, let's say, cash pooler bank, mono country or cross-border if you have a euro cross-border pooling. So the idea is to concentrate everything in your functional currencies. I guess likely it should be euro, to have the view on your account, potentially to aggregate the account per division, per country, per bank, whatsoever, and then to be able to start doing what a corporate treasurer will do to manage the cash properly. And also to manage the intercompany transactions. It's quite important because TP, transfer pricing, is quite an issue. And we in finance, if we finance an affiliate, or if we are financed because an affiliate, a subsidiary, give you some excess cash and make a deposit with you, you need to manage that. But it's not only this kind of flows. It could be hedging on behalf of an affiliate. It could be issuing guarantees on behalf of affiliates, and everything linked to financing, energy, and all, let's say, treasury operations. If we move to the next slide, please, Jonathan. So, again, what is your situation? If you are cash poor, of course, we would like to reduce the amount you need to borrow from your banks, and so concentration and sweeping of account could be one way to do that. But if you are cash rich, we'd like to extract the maximum yield, or to optimize your yield and your return, while let's say respecting bank relationships. So you need to share properly your wallet, because your bank will be frustrated if you concentrate all your deposit with one bank, having some other banks without any flows. You need to make sure that you have a secure way to manage these deposits or this investment, money market fund, whatever, and get the better return. So it's important to do that. Again, to have all the detail on the transfer pricing, because usually when you do this kind of transaction, if you feed an affiliate because they have some needs for an investment, you need to make sure that this relation will be properly documented, managed in a better tool and more robust tool than an Excel spreadsheet, because sometimes it could become extremely complex, and to calculate the scales of interest, of the interest to be paid or to be received. And in case of control, it's a tool that, and documentation, that very often, as far as I discuss with our member, is missing. And so also to segment your cash, Anne mentioned that it's important to also segment the cash and to know exactly where and what is the cash dedicated for, ideally to segment and to a different layer of cash to know if you can place your cash for a longer period of time to extract more yield. If we move to the next slide. Jonathan, okay. So, Jonathan was mentioning in the intro the orchestration. The idea is to have a tool, what I call the bank single gateway, to orchestrate all the flows coming in and out, and to have one single tool. It means that if you are the approvers, if you have bank signatories, you will not, and you will see that in a demo, I guess, you will see that you don't need to enter and to use different tokens, different access. You go on holidays, and for approving, let's say, payment during your holidays, you are obliged to connect to the computer and to use many tokens. So this world is completely over. We have one way to connect. You open your PC with your password. You can validate on one single format all the payment, whatever the bank, whatever the country. So we can collect connect to all the banks. So you can reduce and mitigate the risk of fraud because it's one of the biggest risk. You saw that recently we have the verification of pay that mitigates the risk, but still we have a lot of risk. So it's important to make sure that all the payment will be encrypted from inception up to the let's say the reception by the bank, and you have no risk to be frauded. And what is quite interesting in the solution of the Links solution is the fact that they are Swift users, so they use Swift. They give you access to their Swift connection without being a Swift customer. So in terms of cost, believe me, it makes a big difference. So you push all the administrative burden of the internal control imposed by Swift to Finologee. But still, you recoup the best quality and the most, let's say, or the richest bank statement that will facilitate your reconciliation and ideally go to up to quasi 100% automated reconciliation. And again, by combining good innovation tools, good advisors, and trying to be ahead of, let's say, or leading edge if you are mid-cap or SME, because mid-cap and SMEs have this kind of issues. But not only, let's not forget that if we talk about Luxembourg, based in Luxembourg, Jonathan, and also, we have a lot of managed services, we have a lot of family offices or multi-family offices, we have also a lot of funds, alternative funds. All these guys need to manage funds here and there. They have a lot of flows. And again, to have a real-time view is quite important, especially in a world where for the merchant or the one having B2C activities, you have a lot of, let's say, new payment methods where you can collect a lot of funds. And so if you want to have a real-time view on what is on your bank account and to act and to have what we call the real-time treasury management, you need this kind of tool. And again, when you make this kind of analysis, return on investment of such an investment, the return on investment is extremely and easy positive, and you have a very short payoff. If we move to the next slide. So again, let's say as a conclusion, I would say that it's important for us to make sure that you have all the, let's say, the view without any exception. You can connect to any bank, whatever the country, whatever the bank. To connect with a safe, let's say, way to not to repatriate, but more to, let's say, make and execute payment. And having a solution like Links where you pay on behalf, you collect on behalf, so you recuperate and repatriate information with their Swift connection, but you can also, let's say, ask them to pay on your behalf via their Swift connectivity. You have the best, let's say, and the most secure or safest solution in the world. So you can increase your internal control, enhance your internal controls, and be on a safer side. And then you can start adding some other tools if you want to, let's say, manage the other financial risks. That could be FX, that could be, let's say, your credit facilities, etc. So you don't need necessarily the best-in-class treasury management system, the Kiribati, SAPs, SunGard, FIS, etc., that are quite expensive and require a lot of effort to be implemented. So my recommendation will be consider first the step of being well connected to your bank, be bank agnostic, and then the rest will follow, and you will have the solid foundation to go to the next stage described perfectly by Anne. That will be my recommendation, Jonathan.
Thank you, François. You underline a very practical sequence there. First, get full on-demand visibility over accounts and currencies, then forecast based on clean consolidated data, and then automate concentration and intercompany flows with traceable rules and documentation. Now, that's exactly what we want to make tangible now. Stéphane, please take us into the platform, show us how Links provides that multi-bank dashboard view and how the cash concentration workflow works in practice. You're on mute, Stéphane.
Indeed, sorry. So thank you, Jonathan. I want now to introduce indeed the platforms for you to have a better understanding how it actually works and actually looks like. So I just connected to the platform, and first let me connect to the links portal by basically reusing some single sign-on credentials in order for us to basically authenticate ourselves in the platform. So the underlying logic here is that we basically reuse the existing credentials and connection methods of our client for not having to rely on multiple ways to connect, because basically our client already rely on certain means internally. So we tend to reuse that in order to have basically the users able to connect themselves to the platform and have the allocated set of user rights and authorization, because basically for all the financial related processes, we observe that obviously for a lot of security reasons, users need to have very specific user rights that basically our clients can as well manage. So the first step is basically to already authenticate properly in the platform, which I just did. And by doing so, the user then arrives on the platform. So one important specification is that this dashboard provides an overview of aggregated position of all the accounts that are reflected in the platform. And to this extent, you have high level information. So to this extent, we are not TMS. We don't have the purpose of being a TMS. Nevertheless, we provide high level information in regards to what's the total balance on day -1, what's coming in, what's coming out, and what is planned on a short time frame. So you see here, you have high level information in regards to bank accounts aggregated per currency, high level information in regard to prepared transactions, high level information in regards to counterparties who are also managed within the platform, and then top transactions overview and cash flow evolution. So here already you have some high level indication in regards to cash flow evolution, all based on history data, but as well as everything that's fed into the system. So all the transactions who are already planned, either straight from links or jumping back on what Jonathan, Anne, and François already introduced, are retrieved from external systems, can be projected in the platform. Second important specification is that the platform is so-called multi-tenant, meaning that basically you can manage separate entities on a standalone basis. So if you have certain accounts which are allocated to a certain entity, this can be segregated in this platform accordingly as well. Moving on, I now have coming back to the cash accounts section. So this is already one key point, because it's basically where all the accounts are aggregated. So to this extent, you find then all the accounts in regards to this particular entity that is being managed, because we understand that a lot of you operate in complex structures where you need to manage, well, different entities. So again, you have the possibility to manage those legal entities separately here with the reflected accounts then in this cash account section, with on top the possibility to group sections, to group account into subsections. So the idea here is to give our client as much granularity as possible to manage said accounts, again, based on jurisdiction, based on sub-entities, special purpose vehicle, whatever the client has the liberty to basically group those accounts as he sees fit. And then by then going to a specific account, he will find all the information related to that particular account, meaning the history of transaction, again, all the transactions that are already pre-booked in the system or coming from a third-party system to already have an evolution, a cash flow evolution and cash flow forecast for that particular entity. And then again, as well, the possibility to retrieve all the statements and the history of transactions for that particular account. So the idea here is really to provide, again, jumping back on what François introduced, enhancing the data quality, the general data quality of the bank information that is coming from the various banks, basically, and having this properly aggregated into a single system to ensure that the visibility is as efficient as possible. Then in terms of other additional features, people also have the possibility to retrieve the securities position. So again, if you not only have cash position, but also certain money market funds, those can as well be reflected into the securities sections. So in a nutshell, various assets can be reflected into the platform. Moving on then to the transaction bit. So again, here you have the possibility to manage payment workflows. So the idea is really that each transaction has various steps: creation, signature, transfer to the bank, and execution. And you can then plan and have dedicated workflows for each type of payment. So payments now can be initiated either straight from the platform, where you upload a file from a third-party system, or you create a single transfer, or you export it from third-party system, typically an ERP or, for instance, a treasury management system. So the idea how it would work is that you start to prepare the batch payment into this third-party system. So let's take the example, for instance, in a treasury-oriented way of a treasury management system, where you would be operating certain payment, repayment loans. Then you can basically export the batch of transactions into links, and then the workflow basically gets triggered and initiated. So you see here on my workflow, I have here now reached the step where I basically created the payment. Now I reach signature stage, where basically I need to sign these transactions to then transfer to the bank. So again, you can have dedicated workflows for each type of transactions, who initiated it, what's the ordering account, what's the amount. So each workflow can be configured accordingly. And this is, among others, then where you can also define all the steps that need to follow up, signature, send for approval, depending again on the roles that you have been assigned with. Now, also jumping back on what François mentioned, we do indeed have an application that enables us to sign these transactions straight from our application. And this is basically materialized into this way, where basically now you see, you should be seeing my screen on the phone. And what you see here, we have the links application, in which I can now authenticate, and basically the batch of transaction that I just pushed has been sent to my phone. As I'm a signatory for this type of transactions, I can now review the transactions of this batch. So typically you could foresee that the signatories of a company can get these notifications, for instance, on a daily basis, where they see everything they need to sign on this particular day. And if they are fine with it, they can then sign via the application and Face ID, the biometrics data basically on their phone. They can then sign these transactions and not having to rely on the multitude of tokens from bank A, bank B, and bank C. And now if I refresh, you see that this batch has been executed by me, and in the audit trail, considering that everything is logged, you find the history of transaction of this particular transaction, and you see that I signed it today at 12:44 in the audit trail of the payment, basically. So that's basically in a nutshell payment workflow, again, that can be integrated with third-party system. You can then manage counterparties in the system, retrieve all the reports. Again, the idea being that you really reduce all manual workloads that are currently linked to basically retrieving data from various bank systems and then feeding them into treasury systems, ERP, whatsoever systems. So basically automate these processes so you can generate the reports either straight from the platform or obviously via the API integration with the third-party systems to, in a nutshell, improve the overall visibility that you require as treasurer to perform your daily operations. And finally, let me introduce then maybe everything that's related to automating certain movements in regards, for instance, to cash concentration. So the idea here is really to simplify all the sweeping and cash pooling movements. So different options can be put in place here. The idea is that you can simplify, for instance, zero balancing movements in which you want to, for instance, empty an account at the end of a day, for instance. So you can then select the source account, define the target account where the money should flow to, configure the frequency, how often should this take place, every day, every week, every month. You define when it should start, and then you send this review for automation, meaning sending this to the approval person that can approve this automation process. And when the person signs this movement, then it will start performing this automatically. You then have the same logic for the custom balance, where basically you define similarly the ordering account and the master account, but this time you want to keep your account within certain thresholds, meaning the account should not go above X, and if it does, then the money should be swept to another master account, and similarly the account should not go below Y, and if so, the money should be pulled from another account. And then again, you define the various thresholds, the frequency, and then send the review automation process to the approval. And the way it then materializes is that you have your various automation and cash concentration processes in place. You can see which ones are currently active and running, which one have been, for instance, canceled, what are the ordering account, where does this go to, and you can as well represent this and depict this in a graphical chart, basically, to have a better visual representation as how this actually materializes. What are all the sweeping movements? So you can see here your various accounts sweeping to master accounts. So you can then basically have a good idea, a better overview of everything that's taking place on a daily basis when it comes to sweeping movements. And then finally, if I go now deep dive a bit into these movements, the way it actually looks like, if I take this active movement, you see, this would be an example of the ones where we keep within certain thresholds. So here you see it has been defined that the account should not go above 900K and not go below 800. And every time this happens, you see the balance, the history of the balance of this account stays within these various frames. And you can see when the various transactions and cash movements have been operated to stay within the rules that have been predefined. Similar logic in regards to the zero balancing, where you can see the history of the transaction. So you see again up at the predefined basis, the account gets swept, so the balance falls to zero every time. And again, you can find the history of each movement, tracing back basically the automation process that has been put in place. Finally, you have the tenant settings in which you can manage all your users. So what we want to do here, I won't deep dive into this, but give as much flexibility to our clients to basically manage the turnover of users, of staff within a company, because people come, people go. And basically when it comes to assigning access to accounts, this we know can be quite tricky processes as well. So we want to simplify this as much as possible and give as much flexibility to the client to manage this from an admin standpoint, straight within the platform. So I stand within, I believe, within the time frame. So I believe this gives you already quite a decent overview of what the platform can do for treasurers in terms of enhancing the overall data quality of all the accounts position, aggregating and structuring that data, and then as well automating certain cash concentration movement. Yes, based on this, I suggest that we now move on to the Q&A. I presume you might have some questions, so we are happy to address those now, I believe.
Thanks, Stefan. We'll indeed now move into the Q&A, and there are a few questions that have been dropped in the chat. So I'll take those if that's okay. So it's mainly about links, in fact. So I'll take maybe Seko's question, which is also might partially answers Jean-Paul's question. So what are the available connectivity options? Should the client use your BIC, or do they need to have their own BIC? Additionally, is it mandatory for them to go through a service bureau, or can they connect directly using Swift Business Connect? So the principle that we apply with the Links platform is that we actually have a supervised entity status with Swift. So we have indeed our own BIC, so we access the Swift network, and we offer our clients to piggyback on our BIC code. So they would indeed be using our BIC code when it comes to Swift. Alternatively, they could be using their own BIC. That requires a slightly different setup. But the goal ultimately was to lower the barriers to entry and the cost, as François was mentioning during his speech. So that's ideally what we would recommend, to use our BIC code, which also means that we need to put in place the power of attorneys with the different entities, the client itself, or the clients you're serving. This is one part. So beyond the connectivity itself, there is this administrative part that has to be tackled. And as an alternative to Swift, we indeed use eBICs, which is also an option, and provides also some additional options or features, such as instant payment or verification of pay that François was referring to. Or as an alternative, if none of SWIFT or EBIX is supported by the different banks that have to be connected to the bank single gateway, we would use SFTP host to host, anything that works with the different banks that want to be connected. So here, I believe Jean-Paul was asking, does the bank account data balances transaction get fed into the system through SWIFT messages? Indeed, as you understand, because we would be collecting from the various banks the equivalent of MT940s and feeding them into the tool, and then feeding them back into the systems on which our clients would be running. So there were a few names that were shared by either Anne and François, but this is clearly the way we operate to have an end-to-end process. So links would be used to collect the different bank statements from the various banks, from cash accounts, but also securities accounts, and then feed them back into the different systems on which the clients are operating. So no, the client does not need to have its own bitcode, indeed. And then we have a question from Marine. What is the process to open a new bank account? Is it possible to upload all the documents to the system? So here, in that case, the process to open a bank account would be very similar to the one you have in place, because you still would be directly in agreement with the different banks you are partnering or working with. So you would have to address the bank directly to open an account. Then we would activate the bank through SWIFT, EBIX, or alternative ways to connect to it, and then we would activate the different underlying accounts to the platform. So the documents that can be uploaded, I assume that was more in line with account opening. So it's the documents for the bank to do its own KYC. What you can upload in the platform are documents that you can attach to some of the payments, indeed. So it's not the KYC part, but it would be an evidence, the bill that or the invoice that you are actually paying through the platform. You can attach that, or any kind of documentation that you would see fit to actually attach to a payment. And then Marine came with another additional question, which is, in case of payment of a fund flow between several banks, would it be possible to have all the payments executed in one day? What about compliance review on payments? How long it takes to release payments in case of such review? So for the first part of the question, indeed, you can manage payments in batches. So first, that is one of the functionalities of the platforms. It can be a single payment, it can be batches. So you would import the payments that have been prepared in your system, or upload them by a simple drag and drop of a CSV or an Excel file directly into links interface. There you have all the list of payments that have to be validated and then transferred to the banks to be executed then by the banks. The compliance review on payments, you will do these compliance reviews. You would do these reviews in your system. You can add some risk management functionalities in the platform. We didn't go into the details of that. Stefan didn't really have time, but you can actually do some sanction list screening directly in the platform, where you would be able to screen the counterparties to whom you want to send payments, also those that are paying you, actually. All the counterparties can be screened, and we then would rely on external sanction list providers that would be embedded directly into the platform. So the Refinitiv, WorldCheck, now LSEG of this world, Dow Jones, LexisNexis would be embedded there to do the screening. Or you can also do that in the other platform that we provided, I was referring to, which is KYC Manager. There's a direct link between KYC Manager and links. So in KYC Manager, you would be doing the onboarding and the management of the different counterparties that would be automatically via API pushed into links with a risk score. And then you would apply specific rules. Then if you're mentioning releasing payments, I assume that's more on the bank side also, or it could be also on the bank side. So you can do first your own checks and apply your own rules, as I just explained. But the banks you are actually working with might have internal rules. And then I would suggest to check with each bank what are the rules that apply. We know that for certain of these banks, beyond a certain threshold, they have to review entirely all the payments before they're actually released or executed. But that's their internal process. What we have built is what we call the depository feature, which is basically applying these checks where we provide an interface to the depository bank that can actually review the payment before it's released. So you would be preparing the payment on your side, doing the controls and checks, and then getting the approval. So the signatories would be signing this payment. It would be transferred to the depository bank, and then there would be additional checks before it's actually executed within this depository bank. So this is also something that is in place with links. Right, we are reaching the time. I don't know if we have any additional question at this stage, but maybe I'll have to conclude and thank you all for the questions and staying with us today. Maybe 3 actionable takeaways. Visibility first. You cannot optimize or automate what you cannot see across banks, entities, and currencies. Automation with governance. Rule-based orchestration must stay transparent, auditable, and controlled. That's, I think, very important. As strategic treasury, the real prize is freeing teams from micro tasks. So treasury becomes a value driver. So that, I think these are the 3 actionable takeaways. And to conclude, you will receive the recording and a short recap after the session. If you'd like a follow-up discussion or a tailored return on investment view for your organization, please reach out to us at Finologee. Thanks again, Anne, François, and Stéphane, and thank you all for attending. Have a great afternoon.
Thank you.
Thank you.
Bye.
Thank you all. Bye.